All right, so welcome everyone to our Home Buying Basics webinar. We're super happy you're here. We're super excited to be here to answer your questions and help walk you through this whole process. Before we get started, we'll do a little technical stuff for some Zoom newbies. If you're out there, that's hard to believe at this stage in 2022 that there are Zoom newbies, but you never know. If you need to change your viewing controls, if you want to make it full screen, uh, minimize, you can do that in the upper right hand corner down there. If you're having trouble hearing, your audio controls will be on the bottom left down the audio settings, and just make sure you select whichever speaker you're using, your laptop speaker if you have external speakers plugged in. If you're on a laptop, if you're on a phone or tablet, the audio controls will be up there in the upper right, and then your communication controls will be down there on that bottom screen. If you have a question at any point during the home buying webinar, we're here to answer them. We're going to try to get to every single question that we can. Just click the Q&A icon at the bottom of your screen, type your question in the field, hit the send button, and we'll either respond in the chat box, or we're going to respond live. We have about 15 minutes at the end of the webinar set aside specifically for your question and answers, or for your questions that we will answer. If we can't get to them live, if we run out of time, don't worry, we will follow up. We will email you, or we will respond in the chat with your question. So, and if multiple people answer similar questions, we'll respond to the general consensus there. So with that being said, welcome to Home Buying Basics. My name is Joe Bodie. I'm with the marketing department at SFI or Credit Union. I'll be sort of your host, moderator. We have better experts than me to talk about the home buying process. But I'm in your same camp. I'm almost as I have as many questions as you do, I'm sure. So our goal here is to demystify this process of buying a home and to take the intimidation factor out of it, and to give you everything you need, everything you're going to need to empower you to take those steps to achieve that dream of home ownership. So with that being said, I'll pass it over to Jeff Hudson and let him introduce himself.
I appreciate that, Joe. Thank you. And thank you for joining us this evening, everybody. We're very happy that you're here. We hope that this is going to be a valuable use of your time. My job is just to talk a little bit about the credit union, in case any of you are not familiar. So San Francisco Fire Credit Union was founded in 1951 by firefighters for firefighters. However, the credit union has grown over the years, and we're now focused on not only the needs of firefighters, but that of the entire community. We realize there are many home lenders out there, and sometimes it seems like it can be bewildering to understand the difference between one lender and the next, other than who's offering the lowest interest rate. So a couple of things that's kind of handy to know about San Francisco Fire Credit Union is that we're local, and the entire team that works on your loan is local, which means we understand many of the unique aspects associated with owning a home in the Bay Area. We're also a portfolio lender, and what that means is it gives us a degree of flexibility that some other lenders just don't have, which comes in very handy, especially in the Bay Area. Our goal for the evening is to inform everyone of some key elements, both purchasing and financing homes, so you're as prepared as possible for the homeowner's process. And I think we have a marketing slide, do we, Joe?
We do indeed.
Perfect. And this is just a little bit of information. It shows just a little bit of the number of home sales in the 3-county area in relation to active listings, median days in the market, and a sales price in comparison with the listing price for San Francisco, Marin, and San Mateo counties for the month of February. Just a little marketing data just to help you get prepping for the home buying process. And with that, I would like to turn it over to our host for the evening, Rashida Rencher.
Thank you so much, Jeff. Thank you so much, everyone, for joining us tonight. My name is Rashida Renter. I am a Bay Area native and have been in real estate lending for the last 11 years. I have worked for the San Francisco Fire Credit Union for over 7 years. I am passionate about real estate. I love all aspects of it. I've been from real estate agent to a lender, and I love real estate, and I love working for the credit union. because I'm able to develop close relationships with our members and helping them throughout the process of buying a home, refinancing, anything revolving home loans. Again, I really am passionate about real estate, something that I talk about often, even when I'm not working. I love what I do. I'm excited about the opportunity to bring you this valuable information and learn more about the home buying process.
Awesome. So before we get started, we jump into it. We have a quick survey question here. So we are interested in how soon is everyone looking to buy a home? 0 to 3 months, 3 to 6 months, 6 months to a year, 1 to 2 years, or other. Or are you just interested, just here because it might be way off in the offing? We've got some responses coming through. I've got almost half people. I'll give it a couple more seconds for people to respond before I close the poll. All right, so it looks like we've got 1 to 2 years is the majority, 75%, and 1 to 2 years. That's a good time frame, I think. 0 to 3 months, 1 out of 4. So with that, let's go into the home buying basics. So if you're looking in that 0 to 3 months, or even that 1 to 2 years, Rashida, what would you say are common reasons to buy a home?
Great question. Some common reasons to buy a home are, the pride of home ownership, not wanting to rent, having the flexibility, the fixed payments, paying off a mortgage instead of paying off somebody else's mortgage.
Mm-hmm.
More recently, we've seen the need to expand our living space, right? A lot of people are working from home,
Mm-hmm.
wanting to have a more comfortable living environment, growing families, increasing pets, plants, all kinds of reasons why home ownership is a desirable thing. Um, the Another thing is, historically, home ownership has been a way to build wealth. It's both wealth now and it's also generational wealth. It's really the pride of ownership is the freedom and the stability of having something to call your own.
Mm-hmm. Rather than just paying rent every month, right? And you're not really getting anything for that payment. But with the home, it increases in value over the years. So the payments you're making are, like I said, it's generational wealth. Um, And I think in San Francisco, let's be honest, pets included is a huge reason for me. I'm not allowed to have any pets in my apartment right now. And
Oh,
yeah, I know, right? So sad. It would be a big reason for me to want to move out and get that backyard and get that little beagle that I've always wanted.
absolutely.
So so if all these reasons sound good to you, and it seems like everyone here, again, 0 to 3 months, 1 to 2 years, like seems like the attendees, you've considered these reasons and you're on board, you're ready to buy. So what does it take to get pre-approved? What does that process look like, and how important is that?
Great question. I mean, one of the big themes you'll see tonight is being prepared. Being prepared takes a variety of different we're just a variety of different things, right?
Mhm.
So picking a dedicated team like Judson and I who are knowledgeable, who are able to assist you throughout the process. It's really important to have a team that's working for you. The other some of the main things that we need to get pre-approved is credit. So we want to make sure that you're paying everything on time. You're keeping your credit usage low, below 30%. I mean, sometimes even increasing your credit limit might boost your score. We can
Mhm.
talk about that later. But having a steady income and showing the lender that you have the ability to repay the loan.
Okay. And the thing that like really like stands out to me here on this slide, and what does it take to get pre-approved or approved? The credit is that good is okay, great is better. But I love the good is okay. So even less than perfect credit is fine. You
Absolutely.
can still get
Absolutely.
pre-approved for a mortgage. You can still get in that home that you want, right?
Absolutely.
And I assume, the lender and your real estate lender is going to work with you if there are areas that you need to do to build up that credit, to get it in a good position.
Absolutely.
So let's say you have your credit's in a good place, you have that equity, you got the down payment, the loan to value, you've shown the ability to pay your income versus debt. So then what are the steps that would take in the home buying process? What would a potential buyer need to do to get prepared for this?
Well, getting pre-approved is a really, really important step to be. One, it really gives you an idea of what you can afford. You want to make sure that you're shopping within your means, and that
Mm-hmm.
could mean a variety of things, right? Because on my side, I might be able to approve you for much higher than you're comfortable paying. So it really kind of gives you a blueprint to navigate this entire process, right? So you
Mm-hmm.
want to make sure that you get pre-approved. You what can you truly afford? What makes sense to you? So it's really the first step, I think,
Mm-hmm.
in moving forward in approval, in the home buying process.
Yeah, because one of the worst things that could happen is you find that dream home, you don't have that pre-approval. You find a home you love, it's got everything you want, and then you realize it's out of your price range, right? You're not
Well, and
pre-approved for that amount. So shopping in that space that you can afford.
and Judson can attest. There are times where you might not even be able to view that home without a pre-approval. A realtor
Okay.
might not even want to really move forward with you until you're pre-approved. So, you know, as a realtor, I'm sure, again, Judson will touch on this, but they need to know what are they working with? Where are we
Yeah.
at?
Right. Well,
That's an important part.
exactly. And like you said, I'm sure Judson's going to touch on it. We'll probably hit this, keep
And
keep hitting
it
this
also
nail.
shows how it also shows how serious you are as a
Mhm.
buyer. Like, where, are we really ready to go? Are you ready for your credit to be pulled? Are we ready to see what kind of assets and savings that you have? We ready? Let's go.
Exactly. That's what I was just about to say. It gives the seller confidence, right? And that's why some realtors don't even want to show. If you don't have that pre-approval, then it's a lack of confidence. If you have that
Right.
pre-approval, it shows you've gone through these steps. You've done all the legwork. You're ready to go. You're ready to do this. So let's go. Let's go look at the houses, right?
Exactly. Let's go.
So one of the things that the top thing in the prepare financial assets is the down payment. And I think a really prevailing and common myth or misunderstanding is that you need to have 20% down. And that might be ideal, but that's not always the case, right? So, but if I don't have 20% down, it's not going to prohibit me from starting this process or even from getting approved or even buying the house. But I might need what's called mortgage insurance. And I think that scares a lot of it. Sounded scary to me the first time I heard it. So can you explain a little bit about what is mortgage insurance?
Absolutely. I'll touch on this briefly, but yes, it is certainly, I definitely want to demystify the idea that you need to have 20%. We
Mm-hmm.
can go as little as 5%, depending on what kind of property is, depending on what kind of usage the property will have. If it's owner occupied versus an investment, there are different requirements. But yes, we can go as little as 5% down. And yes, mortgage insurance would be required. So in a nutshell, mortgage insurance is additional insurance that is required by the lender that basically insures the loan in case of default.
Mm-hmm.
So it's because, if you're not putting as much skin in the game, so to speak,
Mm-hmm.
that the lender needs a little bit of assurance that, this will be paid back. A lot of people take advantage of this. It's a great way to kind of keep some of your cash on hand, but still be able to get into a property. So it's really not something that you need to be scared of. But let's talk about your situation. Let's see what will work. Let's see, what we
Mm-hmm.
can do.
Yeah, and waiting to save up that 20% down could cost you more in the long run because you're paying rent while you're waiting to save up that 20%. This is how I would kind of think about it, right? So
Absolutely.
if you have that 5%, go ahead and do that, get the home you want, and add on that the mortgage insurance for the time that you need it. Some of it, um, So that's good to know that you don't, because 20% can seem intimidating for some people, I'm sure. So you don't have to have that. You can go ahead if you have that 5%, and it's very common.
It is very
I
common.
would think. I think it's more common than people realize. So what can hurt somebody? What shouldn't you do when you're in this home buying process, trying to get approved for a loan? What's the wrong thing to do?
That's a great question. I mean, and everybody has a unique situation, but large purchases can really hurt your ability to maximize your purchasing power. Buying a car or furniture, or even co-signing on somebody else's loan or furniture can really, really hurt your ability to purchase, your purchasing power. Missing payments. So if you forget that you have a credit card, missing payments can really hurt your credit score. So these types of things can really hurt your pre-approval, and it can slow the process down. Changing careers. So this can be potentially something that can slow the process down. Everybody's situation is different. If you're coming out of medical school and you get a job, that's not really a change of career, so to speak. But again, everybody's situation is different. So we want to present that you have stability. So when you're getting a loan, you want to show that you've been stable and that will continue. So when we're talking about changing careers, it looks it can be perceived as kind of jumping around or unstable. So again, everybody's situation is different, but these are some things that could potentially slow down the process.
Yeah, and I would imagine that changing jobs is, like you said, it's everyone's situation is different. If you're if you accepted a higher position, a higher title at a different company within the same field, that's not going to look as bad as if you had a stable job and you went to do some freelance. You said, I'm going to throw caution to the wind. I'm going to follow my passion project and I'm going to go freelance. That's going to look a little bit different, right?
Right. The requirements are different for self-employed also. So then there's that.
I mean, yeah, excuse me. So I think, I mean, the general, like the message I'm getting from this is keep your eye on the prize. If the goal is to buy a home, don't go buy the new car. It's not the time to get the new car. Don't buy all the sectional couch before you have that new big living room, right?
Exactly.
Keep your eye on the prize. The prize is the home. That's what
Stay
you
focused.
want.
Stay focused.
So we have, once we've gone through this, we know what's going to hurt us. We know what we need to do to get pre-approved. Now it's time to actually look at which loan would be right for the buyer, right?
Yes. Yeah, I mean, and now is really a great time. We've seen so many changes in the industry and in the, it's really a wonderful time to see what kind of other options there are out there. Historically, we've come from historical low loans and rates. So 30-year fix, everybody has been, kind of harping on 30-year fix, 30-year fix. But the reality is that you're not going to stay in the same loan for 30 years. I've been in this industry for long enough to know that nobody stays in the same loan for 30 years. If you're putting less than 20% down, you're going to refinance your mortgage insurance off. If you're, just the way rates go up and down throughout time, you're going to take out money to do home improvements. You might do debt consolidation and bring in all your credit cards. You might refinance into a lower rate. I mean, there's just so many different reasons why people refinance. There's just different reasons, and you're just not gonna stay in the same loan for 30 years. You think you will, but the reality is that you won't. Whether you're gonna, refinance into a 10-year or a 15 or shorter term because the rates are better. I mean, there's just various reasons.
Yeah, so I mean, there's things to consider, right? Is this your forever home? Is this your starter home? And also, what can you afford at that moment that you're looking to buy the home? So the payments on the 30-year are going to be lower. And I always had that thought too. 30 years seemed very intimidating, and I always had that thought that when I was younger, 30 years, like I'm stuck with that, right?
Right.
Which, like you said, you can always refinance down.
And again, just like you said, there's various reasons, right? So whether it's going to be your forever home, or whether you're young and you see your income increasing over time, or maybe you're newly retired and now you have a fixed income. People need different things at different times for different reasons, and
Mhm.
that's why I'm available. So give me a call.
So don't be afraid of that 30-year commitment. Take what works for you in the moment. The payments are lower, or whatever works for you, and know that there are options and that Rashida's help you is here to help you
Absolutely.
when life changes and you need a better loan, need a refi or whatever. We can make it
Right.
happen.
Right now, our arms are super competitive, and people think that, don't be afraid of adjustable rate mortgages. There's just so many benefits to them. Give me a call and we can go over it.
Yeah. So it's very person specific, right? It's very life
Absolutely.
specific, but um there's ways to make it work for you at every different stage of your home ownership process. And Rashida's here to help you do that, right?
Yes.
For sure. So we have some first time home buying resources on our website as well. You can see home loans. Go to the home loans in the main nav there to first time home buyers. Also, if you click in the learning center, you can watch older webinars, and there's a whole section of our learning center in the website devoted to buying a home, things like private mortgage insurance, do I need 20% down, et cetera, et cetera. So if you really want to take a deep dive, you can always go to our website. You can always email Rashida, and you can always email our realtor Judson, who I'm going to introduce in just a second. I'm sure he'll be here. He'll be happy to help as with any follow-up questions or deep dives that you want to go through. But one more survey here. We were curious, like, how are you looking for a home? Are you using um, Zillow, Craigslist, Redfin? So let me go ahead and launch our second poll here. You can see we have Zillow, Redfin, Trulia, Craigslist, local newspaper, or other. And I remember last time Craigslist had 0. So the Craigslist seemed to have taken a huge reputational hit. We should probably remove it from the poll if it gets 0% this time as well, because it doesn't seem to be as reliable as it was maybe 5-10 years ago when everyone was selling a microwave or a toaster. All right, so I'll go ahead and end the poll here and share the results. We've got Zillow seems to be pretty popular, 80%, 4 out of 5, and then 1 out of 5 of the participants said Redfin. So, but truly a Craigslist local newspaper getting no love. And I'm not too surprised by that. But with that said, so one thing it's a good thing to have in your corner is an advocate. Pretty much anytime you're doing anything, someone that knows some more than you do. And that in this case is going to be Rashida on one end and a realtor on the other end. And with that being said, I'm going to go ahead and introduce our partner for this webinar and in our home buying process in general. And I'm going to introduce Judson Gregory and let him tell you a little bit about himself.
Thank you. It's good to be here. Thanks for the introduction. I'm Judson Gregory, and a little bit about myself. I'm a longtime San Francisco resident. I've been here about 25 years. I've been in the business in some capacity about 25 years as well. I've been a buyer, I've been a seller, I'm a landlord, I'm a developer over many years, and I've been a full-time realtor for around 10 years now. My focus is San Francisco. I know Rashida probably supports people across the Bay Area, but I focus on San Francisco. I'm a San Francisco expert. Having said that, we know people that work across the Bay Area, but I work primarily in San Francisco, residential, working with sellers, buyers, investors, and first-time home buyers, which is a lot of fun. I always say that first-time home buyers are some of the greatest people to work with because they're excited, it's positive, it's fun, it's new, it's different, it's scary. But we try to make it not as intimidating as it can be. I am a member of SF Fire Credit Union. I've gotten loans through them. I've worked with Rashida. I hear that realtors are the worst clients. No comment, Rashida. We got it done, right? We got it done. I live in DuBose Triangle, and I'm a proud doggy dad to Hutch, who is around and could bark at any moment. So,
Awesome. Well, we're super excited for you to be here. Definitely. So let's talk about first steps. So common question, I guess, or maybe a question people don't even think about. Do you want to look for a lender? Do you want to go talk to Rashida at SF Fire to get your lender, or do you want to talk to a real estate agent first? Like, which, is it? It's a putting the horse before the cart before the horse.
Yeah.
Like, what should you
Rashida's
do?
over there laughing for sure. Rashida, I agree that it's really important to get pre-approved to understand what you can do. The reason I say select me first is that I do get some clients that come with pre-approvals in place. Not all lending is the same. So what is important to me is to have a lender that is tried and true, can get the job done, that I know I can partner with. And so the bank credit union has good products and a good representative there, and not all lenders are the same. An offer with a good lender is going to be looked more favorably upon than one with a lender that has not done well in the eyes of that realtor.
Yeah, okay. Well, that makes sense. If you go through the pre-approval process, you do all the paperwork with the lender, you come see you, and then you're like, this lender has a bad reputation. It would be advisable to go with a more favorable lender. Then you might have to start that process all over again, right? And with your network, your experience with us, could sort of.
And that does happen. I do see buyers needing to start that process over again. So luckily, you could start with Rashida or myself. We're both a great starting point.
Okay. So I see you set your budget and obtain cash for a down payment. You say ensure 3% of the home purchase price is liquid. What's the purpose of that 3% deposit?
Yeah, that's a good question. And it's one that can be a stumbling block for buyers. We get pre-approved and everything is looking good. We talk about writing the offer, going through the contract, and what buyers learn early in the contract about line 5 is that once your offer as a buyer is accepted, you are to send away, wire, write a personal check, get a bank check for 3% of your purchase price. Whether you're putting 5% down, 10% down, 20% down, a portion of that must be provided upon acceptance of your contract. So if those dollars are not liquid, it will be very tough to move forward. It has to be presented and available within 1 to 3 days of offer acceptance.
Oh,
So
wow, okay.
whether your 20% is coming from you or family or as a gift or your, wherever you're getting it from, you need the 3% right away. It should be liquid and ready to go of whatever purchase price you might be considering.
Okay. And that 3% is part of the overall down payment though, correct? So 3% is part of the 5% or part of the 20%. Gotcha.
Yeah, if you're putting 5% down, when you send your 3%, you'll give the other 2% towards the end of the transaction before you close.
Okay, that makes sense. I got that. So during the whole process of who pays the buyer's agent fees, who pays the commissions? Is that the buyers, at the seller? Is it part of the whole deal itself? Is that cash on hand, or how does that work?
Yeah, well, everything is negotiable in real estate, and who gets paid by whom can vary, but historically and traditionally, sellers pay real estate fees. So that's one less thing that buyers need to worry about, because there's plenty to do as buyers. So you don't have to worry about paying me in most cases.
Well, yeah, that's good to know, right? You're already trying to do the 5%, the 20% down, and everything else. So it's good to know that it comes out from the seller, definitely. So when you talk about defining your dream home, let's say that I'm looking for, like, I want a 3-bedroom, I want 2 baths, I want the modern appliances, I want a big backyard, I want to have a perfect inspection with no problems, no pest issues, no maintenance issues. How likely am I to find that, or should I be prepared for like gotcha moments, or things coming out of left field?
I would say, what's your budget again? Can Rashida get you a little bit more flexibility on your budget? I think it's important to define your dream home. You really need to know what you need, what you must have, what is a non-negotiable, but it's really important to be flexible. It's very rare that somebody finds their perfect home. You can find something incredible that you just love, but perfection is sometimes hard to find. So try to be flexible and get familiar with the market and what properties are going for. And I can help with that. And Rashida can help you to understand what you can afford and go from there.
And maybe understand too, again, like you're building equity. So you might be able to sell this first home. It's not, doesn't have all those amenities and perks that I mentioned, and you can get there eventually, but you're building equity in that home that you wouldn't otherwise do, right? With an apartment.
That's right. I'm losing you a little bit, Joe.
I'm sorry. Yeah, I just realized I froze. I apologize, everybody. I think we're back. I think I should be good from now on. So the search begins for the home. So how can I search for a home? What should I be doing to start looking for a home?
Yeah, so we had that poll there. It was kind of interesting to see. I've never taken a poll, and it looked like Zillow was a pretty popular way to search. So I always say you can search wherever you feel comfortable. You can look at Zillow, you can look at Trulia, Redfin. I have my own tools that I can provide through Compass, my real estate brokerage where I work, called a Compass Collection. So I can help you through whatever way you want to search. You can send me what you're seeing out there, but I can also send you listings that meet certain criteria. There are also some sort of pre-market opportunities that we can talk about as well, and realtors will be the only ones that have access to those pre-market opportunities. So search however you feel comfortable. I've got good tools. Every agent has good tools, and you sort of go from there.
And a pre-market opportunity would be a house it would be a seller that's looking to sell but hasn't yet actually put it out there. But you as a real estate agent might have some like insider, like it's not like insider trading. It might have some insider information that this is about to come on the market, so you could tell one of your clients, hey, this is about to come on. It's got the things you're looking for. It's in your price range.
Yeah. So, you know, this idea of off market no longer exists exactly. It's more of a pre-market opportunity. So sellers might be thinking, oh, I think I might want to sell my house. I'm not really sure. So you're not putting it out there everywhere. You're just sort of putting some feelers out there. So when I'm in the field at my own open houses, realtors will come through. We'll have a little chat. They'll say, oh, I've got something coming up. Do you have any buyers for this? And sometimes you'll put it together. So pre-market opportunities come in a number of ways: relationships, through some select marketing, through your own brokerage, et cetera.
Okay. So what pre-market opportunity, not on the market, attended the open house, I found the house, I found the one. What do I need to do then? I found my dream home. I want to go ahead and lock it in. I can't walk away from this. What do I need to do then?
Let me know right away. That's the most important thing. Let me know. Offers might be due tomorrow. Hopefully you're done with your process with Rashida. Otherwise, we're going to call her at 4 o'clock on a Thursday and make her work through the evening. Hopefully not. But let me know right away.
She'd do it though. She'd be happy to do it.
She would do it. She would do it. So let me know right away. And then the process looks something like this. The very first thing that I do is if I wasn't there with you at the property, if we didn't see it together, we would go back together. We'll look at it together and assess the home. Make sure it just is the right fit for you. Do you like the neighborhood? Is the bedroom count okay? Does this work for you? I'll then look up the listing and find out when offers are due. Is it offers tomorrow, next week? Do we have time to get prepared, or are we going to pull an all-nighter? Sometimes it's offers as they come. They did not receive offers, so a little bit of an opportunity, and I love opportunity. We'll then request disclosures, look at disclosures, assess the condition, read the seller disclosures. I will pull recent sales to understand the value of the home. Is there a house that sold 3 doors down that's nearly identical? That gives us a really good indication of what the value is. Review the recent sales and also assess the level of interest. If offers are due tomorrow and they've got all these people that want it, that can send the price up a little bit higher. If they've not received offers, it's been sitting for a little while, I like that opportunity for the buyer. Once we've gone through that process and buyers are feeling comfortable and prepared and ready, we then, of course, draft a contract, go through the contract, talk about our contingencies, what our purchase price is, what your down payment will be, check with Rashida one more time to make sure that we're good. Interest rates haven't changed a little bit, or maybe they've gotten better. We can afford a little bit more. And then we submit our offer. And we hope it's accepted. I'm kind of going through this whole list here in one question. Sorry if I'm
That's okay.
speaking too much. Submit the offer. We hope we get it accepted. If not, we're possibly going to be rejected. Maybe we'll have a counter offer or something called a multiple counter offer. So we hope for the best. We hope to win in the first attempt. And if not, I'm there to guide the next possible outcomes.
So on the third bullet point, since like you said, we did kind of run through that fairly quickly, but I think it was all helpful.
did.
It was all great information.
It all made sense to give it one shot.
Definitely, for sure. And the third bullet point, you see contingencies. So what are those, and what contingencies, if I'm the potential buyer, what contingencies should I include in my offer? What's the common contingencies? Is it property specific, or?
It can be property specific and also buyer specific. So the three big contingencies we all talk about in real estate is the loan contingency. Can you get a loan? Rashida is going to review your paperwork and your qualifications, and hopefully we'll understand what your qualifications are. Appraisal contingency is the property going to appraise by a third-party independent appraiser at the purchase price, the amount that you offered. If it doesn't appraise, then we have options. If we have that contingency, we can cancel our contract, renegotiate, etc. The third big contingency of the three ones we always talk about in great detail, we go over these at length whenever writing an offer, is inspection contingency. And that's looking at the condition of the home, everything from pest to roof to windows, appliances, electrical, plumbing, even size. Is it really as big as the seller is saying that it is? Natural hazards, permit history, and more. So looking at the property from an inspection viewpoint is really anything that you want to consider evaluating. Beyond those three contingencies, there are many other contingencies that are built into our purchase agreements. And much of it is done up front, so it may not be a contingency if we have that information and choose to not include it. But there are many others, including some of these things that I talked about, seller disclosures, natural hazards disclosures, permit histories, and much more.
So when you're talking about the inspections as part of the contingencies, who pays for those? When you're doing the property inspection, pest control, like who is that on the buyer? Is that on the seller? Who's going to pay for those inspections that are part of that contingency?
It can be either. If it behooves a seller to do inspections before coming to market so that they understand the condition of the home. It can help them with pricing. And therefore, if the buyer looks at inspections and says, all right, I know this needs a new roof, I'm going to have to spend $20,000 after I close on this new roof, then the buyer kind of makes these decisions with that information in hand. And to be honest, I think that many buyers in a fast moving market will look at that and go, that's okay. I'm kind of able to just squeeze into this house. I can save up for that, or beg, borrow from somebody down the road. I can make it work.
I'll make it happen. I'll make it work. Yeah.
I'll make it happen. But if you get into contract and you learn that afterwards, you're already saying, oh gosh, I'm putting 10% down. I'm feeling a little uncomfortable. My agent pushed me a little bit. Rashida said I can do this, but I'm not really sure. Then buyers are going to negotiate a little bit more hard. And they're going to say, I just learned about this roof. It's going to be $20,000. My agent is telling me, which we have to be careful about that. I need some money back. I need to lower my price. I want some credit towards my closing costs, which puts cash in my pocket. And so it behooves the seller to disclose these things up front. If they don't pay for those inspections, buyers must get them. Buyers should never buy a property without understanding condition. So if the sellers didn't do them, buyers are going to need to do them, and they will need to pay for them.
And somewhat of an inspection. It's not exactly like towards the condition of the house or past, the roof's falling in, but it's going to be the appraisal. So what happens if, and that's part of determining pricing, I guess, right? In the third bullet point as well. What happens if the third party, I would assume it's an independent appraiser. The seller isn't going to just bring in isn't going to bring in their own. You want to bring in a third party, neutral appraiser. What happens if they appraise the house for less than what the seller's offering? In your experience,
so
sellers
if you write an
amenable?
offer on a property, for Yeah, if you write an offer on a property for, let's say, $1 million, first of all, we're writing the offer based upon recent sales. So we hope that the recent sales support that purchase price.
Mhm.
The lender, the bank, the credit union, they hire a third-party independent appraiser, and it is very independent. The bank can't call that person directly. I can't really communicate in the same way with that third party. They come in, they look at the property, and they say, yes, I agree it's worth $1 million. If they say, no, I don't think it's worth $1 million, then using your appraisal contingency, you can renegotiate. You have three choices. You can cancel your contract. The appraiser said it's not worth $1 million. I don't want to buy it. I'm going to change my mind. If the appraiser says it's low, you can say, well, I love this, and I know they got 5 other offers, and if we cancel, they're going to go to somebody else. And so
Mhm.
I'm going to contribute $10,000 more towards this purchase. We're going to call Rashida and say, is that okay? Can we make it work? And we just move forward.
Mhm.
Or if it comes in, we can renegotiate. We can say, seller, my client is putting 10% down, as you know. Money's a little bit tight. The appraisal came in low. We need to make this work. Can you bend a little bit? Let's meet halfway. And so those are kind of your 3 options there. If the appraisal comes in high, that's great. It doesn't affect your purchase. It just makes you happy. I've done a great job for you.
Yeah, right. So what happens, you've gone through this, you've gone through all the inspections and you got your contingencies, everything's in place. What happens when the seller accepts your offer?
Yeah,
What does it
so
look like going forward?
the very first thing that I do is I open escrow with a title company and I request wire instructions or instructions to deliver a check or a bank check. And so then you send your 3% deposit that we talked about to that third-party neutral title company. And so again, you're then making that good faith deposit. You're saying to the seller and the agent representing them, yes, my buyers are so thrilled. Their offer has been accepted. Here's the money. We're showing you the money. We're going to get it in time. And so that's the very, very first step, is to get those funds with the title company.
Okay. In the unlikely event that you've gone through this whole process, the seller is accepting your offer, what happens if I change my mind for any reason? Life life event happens, or for any reason I decide I got to back out of this. Do I lose a deposit? Like what does that look like if I need to change my mind in this last sort of steps?
Yeah, if you're at the end of the process and you removed all of your contingencies, your loan, your appraisal, your inspection contingency, you've signed off on all of your paperwork and you change your mind, you're unfortunately at risk of losing that 3% deposit.
Mm.
It's not an automatic thing. The money doesn't automatically go from that title company to the seller, because that is a neutral company, neutral third party. Really, what the seller has to do technically is sue the buyer for it, and that's a little bit of a threat. It's a conversation. Hey, my buyer's lost their job. We know we're obligated to provide the 3%, but maybe a seller will be kind. So it's first a
Yeah.
conversation, but buyers should know they're definitely at risk of losing it if they have no contingencies. But even if it's a sad story, a job loss, have to make a move, they're at risk losing that deposit, unfortunately.
Okay. Yeah, that's good to know. I mean, I feel like that's probably rare, right? I mean, those sort of unforeseen, like tragic life events don't happen too often. But it's also good to know that if you're not fully in this process, and you get cold feet because you weren't really committed to buying this home, you're probably going to lose that 3% if you've gotten this far and you just have cold feet. It's not because you lost your job. It's not. So, I think that sort of hits that theme of being prepared and being committed, making sure buying this home is what you really, really, really want. Right.
Yeah. We'll go over that 5 times or more to make sure you understand how this works.
Exactly. So the home stretch, I haven't backed out. I found the home, sellers accepted. Everything's good to go. What can I expect in those final days?
So exciting. Within the last 5 days, roughly of the close of escrow, we're going to do a few things. We're going to go back to the property and we're going to look at it again. Staging has been removed, the seller has moved out, and we're going to verify that it's in the same condition. If there's been a flood or a fire, that changes everything. But if it's in the same condition, no material changes have occurred, then the condition checks out, we're good to move forward. Rashida is going to let the title company know and me know that the loan documents have been produced and they've made it to the title company. So the buyers are going to go to the title company in normal times. And pandemic times, we've been sending mobile notaries to homes, to apartments, to parks, to garages, to backyards, sign the paperwork, all the title documents. You're going to wire the remainder of funds needed, the rest of your down payment, your closing costs, and those final funds must be liquid within at least within those 5 final days before the close of escrow.
Okay.
And they must be provided in a certifiable way, a wire, a bank check, no personal checks. It must clear in time to close escrow. And then we wait for the recordation. In San Francisco, the recordation is electronic. The city of San Francisco notifies the title officer, they notify me, and I get to text and call and say, congratulations. And the moment we close, and maybe I'm moving too quickly here, you get your keys, it's time to occupy your home.
Yeah, and I'm sure that's an exciting moment for everyone involved, right?
It's the best call. Well, there's 2 good calls. Congratulations, your offer was accepted. And congratulations, you are homeowners. Those are really fun calls to make.
Yeah, I bet they never get old, right?
They don't.
Well, awesome. Thank you, Judson, for walking us through that, the whole process, everything, you do for the buyers, why it's important to have a realtor, in your corner, and why it's important to have someone that understands the San Francisco market too. Like you said, you're top 1% of realtors in San Francisco. So it's very important. I feel like, to have that level of expertise, right? A level of experience also.
Yeah, the final thought there's a lot to learn, a lot to understand. It's a little scary, it's a little emotional, and we're really here to sort of hold your hand every step of the way. And so our job is supporting you, but also kind of just being someone to help you feel good about the process and really understand the steps that it takes to get there.
Yeah. Oh no, I'm sure. I mean, it's like I said, it's emotional, it's stressful. I mean, short of having a child, this is one of the biggest things you can do in life, right? Buying a home. So it's stressful, it's emotional, it seems scary, probably seems more scary than it is. So well, with that being said, I'll open it up to our attendees. For Q&A, I'll open it up back to Rashida. Oh, I'm sorry, Judson, I forgot we had this one more slide. You want to talk about resources you have for potential home buyers' disposal?
Sure. Just on my website, there are a lot of good resources. Everything that I talked about is in a guide called my buyer's guide. I've got neighborhood maps. I write blog posts regularly. So there's just a lot of information on buying and selling and disclosures and how to write an offer and what to look for in a home. One of the benefits that I think a realtor can provide a buyer is seeing things through the eyes of myself. I've been doing this for a long time and just thinking about homes in a different way. So I write about all this and more on a regular basis. So lots of resources there.
Okay, yeah, that's awesome. Yeah, and I apologize. I almost skipped over this slide, but yeah, judsongregory.com. It's a wealth of information with all of your experience. It's free. So, yeah, I would definitely encourage the attendees, again, check out our website, check out Judson's website. A lot of stuff to read through if you really want to take that deep dive. Or to know, what the current state of things are in the marketplace and in the San Francisco marketplace as well. So, like I said, with that being said, I'll open it up to the attendees. If y'all have any questions, you want to ask Judson or Rashida or Jeff, any questions about the home buying process in general, where you are in your process, feel free to submit those to the Q&A button through chat. These are some on the screen. Some of the. Oh, we do have one?
We have one.
All right. So we have one, do all cash offers have an advantage to mortgages?
That's a really good question. Cash offers are very attractive. There's no doubt about that. It simplifies the buying process. It shortens the buying process. But with a good realtor and with a good lender, I find that cash does not always win. So it really just matters who you're working with and how my reputation can help you. What sellers want is to get their property closed. They want to sell it. They want to get a good price. They want to sell it to someone who's excited to be there. and that are showing that they really want to perform and get the house closed. So cash isn't always everything. Sometimes cash is the developer, and sometimes just sellers want the next generation to take care of their home. So it doesn't always it's not always the winner, but it is attractive. But my job is to help you regardless, and I'm often, if not most always, successful.
I feel like that's probably one of those situations where the pre-approval, again, we can't stress how important a pre-approval is. If you don't have the all cash, that pre-approval letter, that gives that seller the confidence, right?
That's
so
right.
that can like offset the fact that you don't have an all cash offer, but you have a pre-approval letter, you've been vetted, they know they can, they know they're not wasting their time.
That's
so
right.
It's perhaps equally, just as attractive. If the offer is attractive, it's not going to matter. It's all going to come out in the wash, cash or pre-approval. Maybe, say 6 and 1/2 dozen in the other there.
Yeah.
I don't see any more questions coming through. So, I mean, I think we saw this one on our last webinar too. Will my pre-approval be applicable in other states?
That's a great question. We are a local lender, so we focus on the Bay Area, San Francisco, San Mateo, and Marin County, and the outer Bay Area, but also all of California. We only do loans in California, so your pre-approval would not be applicable in other states.
And I think this question is particularly relevant considering the environment with the rising rate environment. Do we offer competitive rates compared to other lenders in California or other lenders in the Bay Area?
Jeff,
do
you
want
want
to take that one, Rashida?
Sure.
Absolutely, absolutely. The answer is yes. We're quite competitive. We do rate surveys every single morning to find out what other lenders are offering on their loan programs, and we try to price ourselves as aggressively as we can. Not generally the absolute lowest, because there's always going to be some lender out there that is going to have a being very aggressive, but we are very attractively priced, and candidly, our ARM programs right now are very attractively priced.
Yeah, very popular right now.
So I think what are it says when reviewing disclosures, what might be a red flag, but I guess even maybe a more general question. What's a red flag for a home buyer? What are common red flags for first-time home buyers that you should look for from a seller, from an off, from a price, et cetera, et cetera? What are just common red flags that I want to walk away from? Maybe this isn't the home or the lender or the realtor for me.
Yeah, well, there can be a lot of red flags. But I also add that there is a price at which everything will sell. And so, the house may not be in perfect condition, but that just means you shouldn't pay a premium for it. So what we're looking for is, what is the condition or what is the situation, and what are you willing to pay for it? If it needs a roof, if there's pests, termites, beetles, all these other things, do you have the bandwidth, the time, the energy, the money to tackle those things, or should you walk away from it? So it's all about risk and reward. So if you find a house that you love, but you're really kind of maxed out, but you know that you have to do repairs down the road, you might want to walk away from that. If you find a house that you love and it's got that bonus space for your grandmother to come stay with you and take care of your kids, but that is an unwarranted space and there's risk of it getting flagged, then you might want to consider something else. So condition is the biggest thing. Neighbors can be an issue. Maybe there's been some issues between the seller and neighbors, and whose fault is that? How do we figure that out? In a condominium, how well is the HOA functioning? How much money do they have in their coffers? With buying multi-unit properties, tenants, do you have the sort of bandwidth to think about tenants and being a landlord? So there are just a lot of different things to think about. And again, all of these things can be overcome if it's the right price, but you certainly don't want to pay a big price for something where it's just going to be kind of a headache and a hassle and cost you money that you didn't want to or anticipate spending down the road.
That makes sense. We've got a couple more minutes, and so we've got about 3 minutes here. I don't see any other questions coming through. from the attendees. Is there anything, Jeff, Rashida, or Judson, that y'all want to add last minute as we close this out? Or
No, I think we've been really thorough today, but certainly reach out to me or Judson if you have any follow-up questions. We'll be more than happy to assist you.
yeah, and we will send out a follow-up email with a recording of this webinar. So you'll have our website, you'll have Judson's website, Rashida's contact info, everyone's contact info, so you can follow up with any questions. And I'm sure, speaking for Rashida and Judson here, but I think it's fair, they'll be more than happy to take time to answer your questions for sure.
Absolutely.
Yes.
All right. Well, thank you everyone for attending. Thank you, Jeff, Rashida. Thank you, Judson, for being here. I hope this was, extremely helpful and informative for everyone that attended. I hope it took a little bit of the stress out of the whole process if you were worrying about it. And have a good night.
Good night, everyone.
Thank you.
Thank you. Bye-bye.